Hey everyone, welcome back to ASX Market Watch and a look at the charts. We're looking at the whole kit and caboodle. We've got the Australian markets, we've got the American markets, we've got the European markets and Asia as well. Talk about checking out the world from a Chartist point of view. It's fantastic and it's great to have you here as well. So let's check it out, guys. We've got, first of all, the ASX Top 200. This is the top 200 stocks in Australia, my home country of course, and what we were looking for previously, if I just enlarge this, was a close above 4,700. Now we had our rates kept on hold this week, and that's this massive bar here, actually this bottom bar here. The market was very happy with rates being kept on hold, and yet it still could not close above the level that we wanted, so hopefully it will do that. That's basically the trigger that we're looking for. There it is there, that blue line. That's the trigger we're looking for. And the target we had based on that, obviously we got our entry signal previously at 4,610 or approximately. You'll see that in previous market watches as well. But if we were to look at a target based on the ASX Top 200 in Australia, we would be looking at around about 5,000. That's where we could expect the market to head to. Why is that? Because it's 161% or around about 162%. It's a Fibonacci number, guys, or based on Elliott Wave. It would be of the previous move. So this is our previous move, starting from the next trough, 161.8%. Plus, it's also previous resistance, as in the previous high back in April 2010, before we had this quite large drop. Now, what is happening at the moment? As you can see, the market is just sort of still flirting around the long-term downtrend line. So that's what we want the market to close above, for it to sort of trigger that next move. And I'll be quite confident, especially as we're heading into November to January, which is traditionally the strongest period of the year. If you look at periods around the year that are the strongest and the weakest, November to January tends to be the strongest period of the year. So that's pretty basic stuff, guys. It's basically panning out exactly as we said. Always a good thing. Next one is the Dow Jones, and again, this one is happening exactly as we said. So last night as well on the Dow, closed above 11,000. That was our first target for the Dow. Really simple stuff. We called it a couple of weeks ago. It's panning out exactly as we said. And if we want to look at a larger target, be looking at about 11,600. So that would be the next stop for the Dow. Obviously, we've got previous resistance at 11,200. So we called it between 11,000 and 11,600. That's where we're at the moment. And so we'll be keeping a very close eye out for an exit signal. Now, what would an exit signal be on the Dow Jones? And of course, which way would we be trading at the moment? If the index in your country is heading up, then you'd want to be trading up as well. It's just common sense. 3 out of 4 stocks will actually follow the overall market, guys. So that's the way we want to be trading. And what we'd be looking for an exit signal or a reversal signal at the moment on the Dow would be a close below this downtrend line. This uptrend line, sorry, and a close below the previous trough. So again, really simple stuff. Don't anticipate that will be happening too soon, but of course you never know. It's good to be ready. And because we're in the zone or the target that we were looking at between 11,000 and 11,600, we want to be looking out for that exit signal so we can be ready to get rid of stocks if we need to, or even sell stocks if we need to on the American markets there as well. So next of all, we'll check out the FTSE. I hope that helps on the Dow. Again, guys, seriously, really simple stuff. And not only is it simple, but it's panning out pretty much exactly as we said. This is a great thing. I mean, economists maybe get it right less than 50% of the time. I think we're running at about 70 to 75% of the time we've been correct on the ASX Market Watch. Loving that, by the way. Loving that. And the FTSE, again, where's this finding resistance? At the long-term downtrend line. We got our entry signal back at 5,490 approximately. Again, that's caused our sweet up move at the moment. If you're following European stocks, you'd be trading in an upwards direction because 3 out of 4 stocks will follow the overall market, as William O'Neill tends to say. Again, what we'd be looking for as a target for the FTSE, let's have a quick look. We've got previous move, and if I will put this in correctly, there, that's a bit better. So between Well, it's currently there at the moment, 5,686. That would be the initial target, and it's right around the downtrend line as well, so it's doubly strong. If it can get above this level, would be happy days, and we'd be looking at a top target of around about 6,000. And again, 6,000 is a round number. So round numbers tend to be psychological levels for investors, guys. They tend to be support and resistance. So for instance, if a market's heading down, it will tend to find support at a round number. If it's heading up, it will tend to find resistance at a round number. Why is that? Well, just because humans are emotional beings. Seriously, we're emotional creatures, and we tend to do things for irrational reasons. Believe it or not, no matter how many reasons we might have, they often tend to be emotional rather than logical when it boils down to the truth of the matter. Last but not least, guys, Hang Seng. This is the beautiful chart that we've been looking at from the very beginning. Previous Elliott Wave, probably the best looking Elliott Wave chart on the Hang Seng in Asia. 1, 2, 3, 4, heading into our fifth wave. We called the start of the fifth wave way back in June 2010, and we haven't had an exit signal since. We almost had an exit signal a couple of weeks ago back here in August, September, but it didn't quite do it. And what's the market done since then? Shablam! It's headed well up. In fact, it's gone probably up about 10%. Beautiful move, loving that. Why did we call the bottom there? I'll just quickly show you. It was very simple. Based on Elliott Wave, we have an A, B, C correction. Now, it happened over a period of 6 to 8 months, so it's a longer term Elliott Wave. A, B, C correction. We were looking at a short-term entry signal after that ABC correction, which was right here in June 2010, as I said before, which was a close above the downtrend line and the previous peak as well. So really simple stuff again. Like, that's such a simple way to enter and exit the market, and we have a target which is heading there now, which is great news, of between 24 and 28,000 for the Hang Seng. So that is panning out exactly as we said as well. Really, it's nice to be right in the markets. I love being right. Obviously, you've got to stick to right money management, guys, not risking too much, but not risking too little per trade as well. Keeping your stop losses in, because nobody's right 100% of the time. Even the gurus, even Warren Buffett, even any of your magical traders, anyone that you've been following over time, and anyone who says they're right 100% of the time, really, seriously, do not believe them. They are liars, and run 100 miles. Don't listen to a damn word they say. It's about how you manage your losses when you lose. So that's just a tiny bit of wisdom. Stick by that, and you'll live a happy trading life. Apart from that, we're getting it right at the moment, so happy days. Other than that, I'll see you next week, guys. There is heaps more great stuff. We'll look at some more targets. Obviously, just see where we're heading, and we're keeping an eye out for those exit signals, because we're in the zone. We're in where we've reached our targets at the moment. All we're looking for is a short-term exit signal at the moment, and we'd be out of our stocks. Apart from that, happy trading. Have a great week, and I'll see you next time on ASX Market Watch. Bye for now.